Well, let's get our guests in now to discuss the market triggers that are lined up next week and what stocks you should be focusing on. Joining me today, Sudarshan Sukhani on the technicals, Gautam Sinha Roy on the fundamentals, and Sharmila Joshi will talk about some stocks that she has picked up to invest into as we head into trade next week. Thanks, guys, for joining me on the show. First, I'm going to go across to you, Sudarshan. Last week, we emerged with just a little less than 0.5% gain. So after all that chopping around, the market did not really gain too much ground. What is the sense that you're getting for next week?
Well, the sense I'm getting is that the Nifty is now stalling. Momentum has come down, and as you said, that's exactly what the market is doing. We are seeing a lot of movement, but the net gains are missing. So we are where we were. The joker in the pack is the bank Nifty, which is underperforming and actually falling and giving bearish signs. Therefore, the Nifty is at a make or break level at 6,050, approximately in that area. Either it will cross it, in which case we can expect a 150 or even a 200-point rally in the index, or it will fail to cross it, in which case I expect the downtrend that had originally started to resume again. This would be a corrective up move, that would be over, and then we'll start heading towards 5,500. So by next week end, we'll probably know. So next week should be interesting and important both.
Okay, so interesting and important week coming up. Let me toss this question to our fundamental guest. Sharmila Joshi joins in as well. Sharmila, hi. Last week a lot of the good performances in terms of earnings were rewarded by the stock markets. So TCS was up close to 9%, Bajaj Auto was up close to 6%, while on the flip side, the disappointing earnings got knocked back quite a bit. Names like Kotak were down about 10% or so. From the list that I mentioned, are there any stocks that you would accumulate at this point?
Perhaps not a TCS or a Infosys, but I think clearly IT seems to have kind of regained flavor. So, I think that's where you could focus on, because even the mid-cap IT companies have really reported good numbers. They've also, of course, had support from the fact that the rupee has depreciated, but that notwithstanding, I think even the kind of growth they've shown in client addition, and they've come out sounding quite confident, So I think whether it's an iGate, whether it's a Hexaware, whether it's a Mindtree, we've seen really a good set of numbers. So I think IT is clearly a sector which is back in focus, and you could see some amount of build up there. In fact, one of the recommendations that I do have is on Hexaware, which also reported a very strong set of numbers, and we have in fact upgraded our target from 115 to 135, given that the management sounded so positive on maintaining margins as well as growing clients in coming quarter as well.
Okay, so Sharmila Joshi has a buy on Hexaware with a target of 135. Gautam Sinha Roy of Motilal Oswal is also with us to discuss the market trend. Gautam, the important takeaway according to me last week was the fact that despite the Nifty maintained its head above water, the Bank Nifty was down 6.5%, and we saw a lot of banks bleed in trade last week. Names like IndusInd, ICICI, Kotak were all down about 10 to 12%. Would you use this as an opportunity to accumulate any bank?
Yes, exactly my thoughts, because we have suddenly seen a reversing of trend in the private bank space, especially wherein these banks have underperformed massively in the last 1 week post especially the RBI's curbs on liquidity. Now I believe that the run on the banks has been a bit overdone already, and I would look to accumulate some of these stocks. Probably ICICI Bank, one of the leading names here, available at 1.5 times valuation, price to book 1 year forward. Now the reason behind this is that these banks are one of the most secular and staid growth stories that India has to offer. And whenever, because of market concerns, you find opportunities to accumulate these banks at cheaper valuations, then you should just do that. And that's what is being offered to us presently. So that makes it an attractive opportunity to get into some of the private banking names from an investment perspective, especially. So that's why I would like to pick ICICI Bank as a favored pick here.
Okay, so the investment advice is to pick up any of these banks. ICICI Bank is the preferred pick that Gautam Sinha Roy has. But Sudarshan, I know you beg to differ for the shorter term, because you do believe that the banks are might be headed lower. So I just wanted your thought on the private sector banking space. Just for the shorter term, or for next week specifically, are there any short calls that you would advise in the private sector banking space?
Yes, I would. In fact, it's not just next week. I suspect this decline will continue for some time. But for next week, IndusInd Bank is a short-selling idea. The stock is now making an intermediate distribution pattern which suggests that lower levels are coming. They may or may not, but at least for the next week, I imagine the downside momentum that it has picked up should see it through at lower levels. It's probably a very interesting short-selling candidate.
Okay, so short sell IndusInd Bank with a target of 398 and a stop loss at 461. That's the word coming in from Sudarshan Sukhani. Sharmila, we are in the thick of the earnings season now, and next week we have important triggers like the F&O expiry as well. What in your mind is the most important, a stock or segment to focus on next week?
I think probably the private banking space, really as for reasons you all have been discussing, that we've seen this cut come very sharply in this last week or so, and so a lot will all now depend on what kind of pressures this sector faces really in the run up to the expiry. But this is a shorter expiry from that point of view. So I'm not expecting too much of a recovery, but I think that some of these names look very oversold. So I would expect some amount of recovery really based on that. And then maybe any important result which surprises us, but I don't really see too many of those names. I think that we'll have to play it as it comes, because we do have a lot of important numbers. But I think as a space, probably private banking could come into focus because of expiry.
Okay, stay on guys, we just need to take a short break. Many more questions lined up for you guys, but in the meantime, let's listen into some market opinion that we heard through the course of the week. We'll come back.
The market for the whole year is range bound. That's what we've been reiterating right through the beginning of this year. And as we move to the top end of the range, you need earnings and you need the economy to start supporting that sort of level at the index. Our view is over the next 4-5 weeks, earnings will disappoint again. In terms of economic growth also, we'll see numbers not being very strong. And to that extent, we'll keep getting these pullbacks back to the lower end of the range as we get these numbers. The move up will be all led by better policy action and hopes of rate cuts starting again, which to some extent now have got postponed, because for the next 2 months I think the hopes of rate cut are going to be muted.
The second half we will have a massive consumption trigger. That will be driven by a number of factors. One is of course the monsoons have at least so far quite good. Second is we are hoping still that the interest rate cuts will start, if not in July, August, maybe sometime later, because till the rupee stabilizes, you're not going to have interest rates being cut. And the third is the huge spend that you're expecting from the government. This earnings season, the one that's the quarter that's gone by, there could be disappointments in metals, in commercial vehicles, in cars, in consumption.
Actually, feeling more positive about that interest rates could fall quite significantly and tumble down towards the end of the year, because the economy is going to take this on the chin, and at some point interest rates will have to fall. So I'm actually thinking that in the next few weeks, as we see more carnage in the real estate and banking sector, that this could be the time I've been looking for to make that switch from defensives to interest rate sensitives. It's not today, but it's certainly coming. So I think the next few weeks is going to be crucial for that. So I'm actually feeling more bullish than I am bearish.
Welcome back. You're still tuned into Taking Stock, your weekend dose of all the triggers that you need to watch as you head into trade next week, and all the stocks that you can be initiating for trade as well. 3 guests are with me to discuss, how the next week will pan out. I have Sudarshan Sukhani with me on the technicals. There is Sharmila Joshi and Gautam Sinha Roy on the fundamentals. Thanks, guys, for being with us on the show. I want to just get some trading ideas out of the way. Sudarshan, you have a couple of buy calls, one in the pharmaceutical space and one in the oil and gas space next week. Take us through the rationale behind that and the target prices there.
Sure. We have Glenmark as the buy in pharmaceuticals. First, pharmaceuticals as a sector has been buoyant and cheerful. It's been outperforming. Glenmark itself is an outperformer. The stock has been rallying and is in a bull market of its own. So bull market stocks continue to move up. We would really want to time the entry. This is a good time to buy. For the last 4-5 days, the share is in a consolidation. Normally, uptrending stocks will break out after the consolidation. That's what should happen next week. So we are buying almost at the point of a breakout. So Glenmark is a short-term swing trade on the long side for this reason. The second is GAIL. GAIL has seen bad times. It now appears that the stock is consolidating at lower levels, is making a bullish pattern and is willing to go higher. It's already seen gains this week, the week that went by, and the chances are these gains will be built upon in the next week, because once momentum starts on the upside, it doesn't wane quickly, it continues till it distributes. So GAIL is far away from distribution so far. It's a buying opportunity again. Both these opportunities are short-term in nature, but they are worthwhile.
Okay, those are two calls that you can buy as you head into trade next week. But Gautam, I wanted to discuss the capital goods space with you. L&T comes out with its numbers on Monday, and I noticed that you have chosen to buy into that stock. Tell us about the rationale behind that, and also on BHEL, which tanked 8% on Friday. Why do you think that happened?
Well, L&T is one stock that one would advise buying, because results are there. Lately, we have seen that analysts in the street generally is not expecting spectacular numbers from L&T to be delivered in terms of the quarterly results. But at least on order flows front, the last quarter that has just gone by has been a path-breaking quarter for L&T, with one of the largest orders in the Saudi Arabia region in the hydrocarbon space that it won in the last quarter, which should really shore up the order book, and order inflows on a year-on-year basis should look good. And if it combines this with any positive surprise on the results front, P&L front, that should really aid the stock, and valuations are also supportive. If you look at the standalone PE, that would be around 13 times x the subsidiary valuation. So I think there's a good chance that L&T could take more support from here. It's a bit of a contrary bet, but one that I'm willing to take at this time. As far as BHEL is concerned, really it's a no-brainer that the stock in the long term can't really go up because of huge concerns about its future business opportunity and growth. One of the few nifty stocks where one can expect EPS growth for the foreseeable future. So no point really wondering why BHEL will fall. It will keep falling. And we can't really predict till when, but it's going to be one of the weakest counters you'll come across for sure.
Okay, so contrary the predictions there, buy into L&T but expect perhaps more weakness in BHEL. Sharmila, you have a call on Tata Chemicals for next week. What is the idea behind that, and what could the price target be that you are hoping to achieve?
Actually, it's not just next week, but I think this stock is emerging from really a low that it made, and it's kind of consolidating at this level. And I think it has a good potential to go back to 325, 350 kind of levels. That kind of a price band. And things have been quite bad for Tata Chemicals in this last quarter, where they had that European write down, as well as domestically things don't look too good. And in Kenya too, they face problems. But what I think is that you have to look at Tata Chemicals as really a sum of parts kind of business, and then you have to look at the kind of market share that they have in salt, and then soda ash, fertilizer, and the fact that they have investment in other Tata Group companies, and the sense that you're getting, that a lot of these fertilizer companies are now beginning to do better. And we've seen, in fact, Rallis declare fairly good numbers in last week. So I think based on all that, I think that Tata Chemicals now looks quite nicely priced, and this is a stock that you should buy, if you have a couple of quarter kind of a view. And as I said, I would expect targets of about 325 on the stock.
Okay. So Darshan, last week we saw a lot of beaten down names gather traction in the mid-cap space. Manappuram was up 26%, Opto Circuits was up about 24% or so, and a whole host of other names. Jain Irrigation was up about 15-20%. Do you think that's just a dead cat bounce, or do you think there could be some trading fervor in these names and perhaps an opportunity to go long?
No, some of them have opportunities to go long. For example, Jain Irrigation has, and even Manappuram is a speculative buy, but perhaps the selling was overdone, and some of them don't have it, the other names that you mentioned. So I think traders should be aware that you have to differentiate. But next week, because of its choppy nature, the likely choppy nature is not suited for trading in mid caps. Perhaps the week after would be better suited.
Okay, but you do have a sell call on financial technologies. So does that look like a more, do you have a high conviction sell on that name, and what would the target be there?
Yes, it's a high conviction sell because it's away from the stocks we just mentioned. Financial technologies has been in a bear market of its own. It's been falling. We've had a sell on it many times earlier. That decline continues. At 600, it's now breaking all kind of support levels. So I would expect it to go much further down. It's a waterfall decline really. For the short sellers, it's a very good stock to go and sell. The upside is protected in the sense it's not likely to go up. And if the markets tank a little also, if the Nifty weakens just a little bit, this one could weaken much more.
Okay, fair enough. Just a final comment from you, Gautam. Last week we saw Bajaj Auto rise about 5% after delivering margins that were better than expectations because of the rupee depreciation. Next week we have Hero MotoCorp as well. Just your thoughts on the two-wheeler sector, and if you would advise anyone to put their money there.
See, the sustained up moves in the sector would be a function of demand growth coming back and in a meaningful way. And the market share redistribution which has been happening kind of stabilizing, which is something that should happen this year. So from an investment perspective, probably we can look at these stocks, but we don't really expect that the strong movement that we've seen this week in Bajaj could be sustained in the near term. But from an investment perspective, definitely very interesting buys, both of them, Bajaj Auto and Hero Honda Motors.
Okay guys, we've run out of time, but thanks very much for joining me and discussing all those stock ideas. You guys have a great weekend. We'll see you again next week. Thanks for that. That's the word coming in from all the market experts on how to approach next week and the individual triggers. But let's switch gears to the futures and options space now.